Hello, good day everyone. Today we are going to talk about psychological key levels. Before then, you are welcome to Bulma FX Trading Group. What are psychological key levels? According to Daily FX, psychological key levels are market price levels which are often key levels in forex denoted by round numbers. These round numbers frequently act as a level of support or resistance. So when we say psychological key levels, we are talking about psychological support and resistance levels. Psychological support and resistance consistently work because of fundamental human disposition. Typical example is when we say Bitcoin is at 40,000 or Bitcoin is at $50,000. What does that mean? It doesn't mean it is exactly 50,000. It might be a few pips less or a few pips more than 50, but people are looking at it as 50, and big players used to play their pending orders or stop loss or take profits around those whole numbers. According to altfins.com, they say key levels, they are horizontal support and resistance, and they are pillars of technical analysis because they are areas where a lot of trading actions take place. Also, Wikipedia talked about the same thing. They said in finance, psychological, meaning in forex, psychological key level is a price level in technical analysis that significantly affect the price of human underlying security, commodity, or derivative or derivatives. Typically, the numbers is something that is easy to remember, such as round numbers. Save these words, round numbers. Okay, so why are we talking about this? I'm talking about this because I was taking my trades. You see, this is my group. I was taking my trades based on the psychological key levels, and we have been making profit all along. And then all of a sudden, somebody came and was asking us, how can we draw such levels? I'm looking for the question based on what time frame. So this is the question. It says, how can you level the dons? So that is why I'm starting this class. Now let us quickly go to MetaTrader 5. Hit the nail at the head. This is MetaTrader 5. Let me go to crash 1000. So when you come to draw psychological key levels, we said they are whole numbers. First of all, you have to look at the higher time frame. This is daily time frame. Now on daily time frame, you can see that this zone, this area, is the most recent market. So you're going to draw, because we are not big banks, we are not big players, we are not whales, we cannot actually trade on these very big time frames like D1 week, the weekly or monthly. We cannot. So we just come to the most recent market activities here on daily, and then that is where we are going to draw the lines. Now let's look at this and then randomly or psychologically select the numbers that let's say from the list, which number is supposed to be the least fun the least whole number. It is around here is something around 800, 8500. So we are going to have one here. This is how you draw one. You take this horizontal line and put it there. Then it might not perfectly match on that level. Then you long press on the line like this. Then you edit it here and you put 5000, sorry, 8500. So this is the first level. The next one is supposed to be 8600. 8000, you can place it anywhere and then you edit it. 8600. 8600. The next one, now even before we proceed, you can see that the market has respected this level here. It respected it several times. You see a candle bounced up, another one, another one, another one. So the market was seriously respecting these levels. That's why they are very important, and at times they are more important than any support and resistance level that your eye might see, even though they usually match the same. So now the next thing we are going to draw is going to be, sorry, go back here. The next one, it's still going back to daily. The next one we are going to draw is going to be 8,000. I will change it. It's going to be 8,700. And then the next one, I'm going to populate this recent market with these levels. The next one is going to be still 8,800. The next one, sorry, daily is here. I'm still drawing them and they appear. I'm going to draw the next one. It should be 8,900. You see. Now the next one after 8,900 should be what? Should be 9,000, somewhere around here. So let me draw 9,000. I will edit it to make sure that it is a whole number. These are round numbers. 9,000. If there is any other one, we are still on the recent market. The next one is going to be 9,100. Yeah. Okay. So based on the most recent market, these are my psychological key levels drawn on daily time frame. Yeah. So now, having done that, what you need to do next is you should come to lower time frames, like H1, and trust me, you are going to realize that this market is 100% respecting these levels. For example, now, look at what we have here. It landed on 8,600, and then what happened next? The market moved from there, from this point, from 8,000, it moved to this level, and then it moved to this level. Now it retraced. The market retraced back, and it was stopped by the same psychological level, and then the next move proceed to another psychological level, which is this. Then it came back, and I assure you it will be respecting another level. Look at it here. It respected this level. Yeah, this one. It respected this level. It did the same here. So this formed what we call a double bottom. Now whenever you see a double bottom, and most interestingly, it happened on the same plane, on the same psychological key level. So when you see stuff like this, what do? When you see double bottom, you know that there is going to be a giant move upward, and that is what happened. The market pumped from this level, it crossed this one until it reached another psychological level, 900. Now the market also fell down. It also bounced at this level, and then it pumped. So technically speaking, what we do with these levels is that we determine how to take trades. Let me go to H4 so that we can see. Now this level served as ladder points for us to take trades. For example, here it served as a ladder point. Sorry, something is wrong. This is one level. So it pumped across here, and then when it was retracing down, it bounced on top at another key level. So as it proceeds from this level, it pumped again. Now while it was retracing, it retraced on another psychological, I don't know whether I'm making sense, guys. Sorry, I picked a wrong tool. I was supposed to pick this one. While it was retracing down, it retraced, it bounced up again from another psychological key level. That is how this market play. Now you see it has been an uptrend so far, and whenever you see impulse like this, you see another one. It actually bounced from another level here. Yes, so that is what I was explaining. So you see it has been an uptrend so far, right from this level up to where we are seeing here. Now at this level there has been consolidation, and what does that mean? It is showing you that there is probability of reversal. Depending on how you identify reversal point, all we know is that we are considering psychological key levels, and we want to confirm if that reversal happens, then the market will continue going downwards, still along psychological key levels. Yes. Now, what we have here, this is the most recent above all, and it is still the same thing that we're talking about.